Hi, thank you everyone that is joining our financial literacy workshop. I'm Jacky, I University of Hawaii Federal Credit Union. I'm the marketing coordinator, so a lot of times you may see me at table events at community colleges and UH. And thank you everyone for joining today. I hope everyone learns something, and feel free to ask questions throughout the presentation. This is not just me talking the whole thing and questions at the end. Feel free to ask any questions throughout the presentation. Okay, again, we can start now. If you can click next, please. Okay, so this is our overview. Today we'll just talk about our history, main benefits of a credit union. So you may hear like, what's the difference between a credit union and a bank? We can go over that. Savings and checking, debit card versus debit card versus credit card, and how to build credit. Understanding interest rates and fees, credit cards and credit report, and then a Zogo is a financial literacy app. So yeah, that's the overview today. If you click next, please. Okay, so this is just a quick overview of our history. We started back in 1955 from University of Hawaii professors. And yeah, that's the start of the credit union. And throughout to 2023, we've just actually opened a branch in Kapolei. So we're near the Kapolei target. So yeah, so just throughout our history, whatnot. So next, please. Thank you. And I think you have to click next one more time. We do have 4 locations on Oahu. The main branch, thank you, is in Makali, near South King Street. And click next. Our next location is the campus branch location. It's actually located in the University of Hawaii campus center near the food court. And thank you. Our third location is Manoa Marketplace, which is again next to Subway and the Brug. And our last location is our Kapolei branch. Oh,
yeah. Hey, how you doing? Tired. Couldn't beat my on my exam.
Okay.
So all A's, B's, and couple.
I'd like to remind you to mute. Thank you so much. Thank you.
Thank you. No worries. Yeah. And our last location is our Kapolei branch. We just opened it back in June of this year. So it's a brand new branch. And yeah, so these are our 4 locations on Oahu as far as our locations. And click next, please. So, if you click next a little bit more, sorry about that. I put these like the bullets. Thank you. So the question is like, why would you pick a credit union? Of course, like as you're going through your financial journey, wherever you may be, you may come across a bank, which we have a lot of banks here, Bank of Hawaii, American Savings Bank, yada, yada. And then you'll come across credit unions, and then you'll feel like, okay, well, what's the difference? Why choose one over the other? Well, for credit unions part, because I'm with a credit union, it's not for profit. We're not here to make money off you, basically. It's member owned. So the idea is like, it's owned by members. When you join a credit union, you're part of an ownership of a credit union. The third point, people helping people. That is our philosophy. We are here to serve the community, serve all the university and its community colleges. Again, just helping people by people. And if you're wondered if it matters, we are insured by the NCUA, basically saying that we're insured, we're backed up by the NCUA. Thank you. Next one is our score, actually. Thank you again. Thank you. We're actually rated at 80% at this point. So basically, if you compare scores of like how good we are, 80%, we're at this point of passive. We're not at the 9 and 10. We're striving for it, but we are still considered good. Again, the main thing is people helping people. That's the reason why you can pick a credit union. Yeah. Next slide, please. Okay, so thank you for all these. All right, so the first thing is the next thing I wanted to talk about is common things of like, okay, well, following up why pick a credit union. These are some myths about credit unions that may occur during your decision between choosing a credit union or a bank. First one, credit unions have fewer locations than banks. That is actually a myth because Yes, we're not like other banks. We have multiple locations every single corner. What credit unions are able to do is have a service called shared branching, meaning you could go to a different credit union that's not our credit union, but you can still access your account at that different credit union. So therefore, there are multiple branches, not just on island, but at different states too. So if you go to for example, like California or New York, as long as you go to a credit union as part of a shared branching network, you can access your UHFCU or other credit union accounts at those locations. Second one, credit unions have less ATMs than banks. While on the surface level, yes, we probably don't, most credit unions don't have ATMs all over the place. But most credit unions, what they do is they work with banks actually in terms of borrowing their ATMs, and that way you can still access your money through using your debit card. So again, for us, for example, we work with American Savings Bank and First Hawaiian Bank using their ATM machines. So for example, if you use our debit card at their ATMs, there's no service charge. Third point, credit unions do not have the same online services as banks. We do. We have online banking on your computer and on a mobile app as well. We offer the fourth point, we offer fewer products and services as banks. Also a myth, because we offer pretty much everything in terms of like, we offer auto loans, credit cards, mortgages, HELOCs, even line of credit. Second to the last point, because banks are usually larger, they can provide better rates and lesser fees. That's also a myth as well. A lot of times credit union rates and fees are a lot lower, and the better rates in terms of a car loan or a credit card are usually a lot better. Last point, credit unions are not insured like banks are. Again, that is also a myth, because as a previous point, we are insured by the NCUA. Next slide, please. Thank you so much. Thank you. So the next thing is product and services of credit union. So again, this is just the third point of why choose a credit union. Most credit unions out there will offer these services. Again, they're just like a bank. So again, part of financial literacy is understanding like what kind of services are you getting when you go to a credit union. First thing, share branching and ATMs. Again, whichever credit union you choose, as long as you go to a credit union that's part of shared branching network, which is that logo on the right-hand side with the maroon triangle, it says co-op on it. When you see that logo in any credit union, you can always access your account at that location. Again, that makes it widely available. So again, you're not just stuck, not just on Hawaii. If you're in the mainland, you can always access your account there. Again, basic things, we offer savings, money market savings, checking. For us, we give you a free debit card if you open a checking account with us. Loans, personal loans, credit cards, auto loans, HELOCs, mortgages. Again, line of credit, CDs. CD stands for Certificate of Deposit. That's just meaning like you put money in this location, put money in this account, and locks it up for a certain amount of time, and it occurs higher APY, which we will talk about later. Wire transfers, again, we offer that. Online and mobile banking with mobile check deposits. So if you ever have a check and you can't make it to a branch, you can take a picture of it with your cell phone or whatever phone, and you can actually do a mobile check deposit, depositing that check into your checking account. So those are the services that we offer at the credit union. Next slide, please. So these are some fees to watch out for. Thank you so much. Before I go any further, did anyone have any questions on like why a credit union or the product and services out of curiosity? Okay, I'm assuming not. But feel free, again, if you have any questions. Okay, thank you. Feel free to ask away later or whatnot. So the next thing I really want to tackle on for financial literacy, again, I'm not sure like how many of you know about this, but this is something I felt like was important, because a lot of times, a lot of our membership is like students, and a lot of them do not know about fees to watch out for, which I found like is really important, because sometimes students or whoever, sometimes they lose out on money because they weren't careful on certain topics or certain like weren't aware of things. So I hope in this presentation you are aware of these type of fees to save you money, basically. So first things first, new account hold policy. So what does that mean? Again, I'm trying to go briefly as quick as possible. Basically, like when you open an account at any credit union or possibly any financial institution, let's say you wanted to deposit a check. Well, if you want to deposit a check, the check will not be available for you because you are a new account and there was a hold policy basically. So if you deposit a check, the check will be on hold for probably maybe depending 10 business days, because again, we don't really know you. There's no like relationship. So therefore, if you deposit a check, it will be on hold basically. Next one, dormant account fee. Basically what that means is like if you open an account with us or any FI, financial institution, if you don't do anything with your account for a certain amount of time, there will be fees that will subtract from your account every month. For us, it's 2 years. So if you open an account and you don't even transfer $1 from your savings to checking, or you don't do anything, a dormant account fee will kick in. And every FI will have a different timeline of when they want to kick those in. The third one, this is a very big one. It happens a lot. It happens to me. Is an overdraft transfer from your savings. What it basically means is if you have a savings and a checking, and you don't have enough money, let's say you use your debit card and you don't have enough money in your debit card, it will connect to your checking. So if you don't have enough money in your checking, but you have money in your savings, what will happen is the system, if you don't have enough money from your checking, it will pull from the savings to cover your expense. And if it does do that, you'll look in your statement and see a overdraft transfer fee. And it could range from any amount. We charge $5, and other places may charge a lot more. But that again, it's just it could be prevented if you just make sure you have enough money in your checking account, so it doesn't have to pull from your savings to occur an overdraft transfer fee. Next one, stop payment. What does that mean, a stop payment? So basically, it's like if you write a check and you send it away and you want that check to basically not be to be voided. Let's say you send it to a check to somebody and then something happens where you don't want that person to deposit that check into that person's account. There's a stop payment. That basically is just like saying the check is completely stopped, and and sometimes members think it's free. Unfortunately, a stop payment, there is a cost to it. We charge $25 actually for that. And that again, that just is like some things could happen. Another reason for stop payment could be like you could be mailing a check and your check may have never gone to that location, and therefore someone may have your checking account and your routing number somewhere. So a stop payment is something you can do to make sure that check cannot be deposited or try to be cashed out. So yeah, that's another thing too. That's another reason for a stop payment. The next one, return check. This is another one where it could really get, again, all these things show your history. So if you incur a lot of these fees, it doesn't make you, it has like a reputation kind of on you, basically. Return check, as simple as I can say it, you can write a check and you give it to someone. That person tries to cash it and the check is no good. That person gets a return check fee, actually. Or actually, that someone can give you a check and that money, there may not be enough money in there, but you don't know, right? Because it's a paper check, it's not cash. And if the check becomes no good, you get an actual return check fee. We charge $15 actually for that. So that's actually unfortunate. And the thing is, the other person that's writing that check, they'll get a fee as well, because the system tried to pull money from their account and therefore there wasn't enough. So basically both sides gets a fee, which leads to my next one. The person that did not have money in their account when the check tried to get drawn from will get a non-sufficient fund fee, an NSF fee. So similar to like the overdraft fee, this one's a little different. This was where you completely do not have enough money to complete a purchase. So again, if you were to use a debit card and you didn't have enough money in that debit card, again, the system will try to pull from the savings, but if there's not enough money, the transaction will not go through, and because you tried to do something where it didn't have enough money, and non-sufficient fund fee will kick into your account. So what happens is you'll go on red, and red means you'll be on like kind of like you'll be under the zero, under your balance of 0 and then you'll be, again, we charge $28. Other places may charge less or charge more, but this is something you don't want to see. So again, a collection of these fees are things that you want to look out for and prevent as much as possible, because they can actually affect your account standing with the credit union. And a lot of times, if you incur too many of these fees, who knows what they can do. Like sometimes they could freeze your debit card because incur too many of these fees, and possibly other things as well. So hopefully you can prevent these fees that may affect you. So next slide, please. Thank you. Thank you so much. Okay, so next one, so moving forward is interest rates, APY, APR. So this is something where you go to any financial institution, you can go to a dealership, you can go when you're shopping for a credit card, when you're shopping for a home. These are the type of things you look out for, basically. And APY stands for annual percentage yield, basically the amount you earn on your deposit in 1 year. So anytime you see APY, you want to see this number basically high, like very high. So examples of APY, your savings account, certificates, which is also known as CDs. So anything that's like a savings account, you always look at the APY, you want that number to be as high as possible. Next one, APR, stands for annual percentage yield. Again, the amount you pay back the bank to borrow money. So for example, loans, credit cards, anytime you see APR, you want to see that number as low as possible. So APY high, APR low. That's pretty much it on that. Next slide, please. Thank you. Thank you. So moving forward from APY, APR, next thing is, what's a savings account? Well, what's the purpose of it? Really the main thing is it's an interest-bearing account that basically it's usually like one of the highest, well, not the highest, but like it's just basically savings. You put money in there. At UHFCU, our current savings APY, again, annual percentage yield, is at 0.07%. And again, you use the savings account to basically make small deposit small amounts of money to meet your short-term goals in terms of your savings goals. Again, great for holding for emergency funds. You can have access to your savings account. You can transfer into your checking account. Again, the purpose of it is to save. Next slide, please. Next one is the checking account. 1 second, please. Sorry. Okay. Checking account. Basic purpose of checking account is to not save money, and instead you're basically like a convenient way to handle personal transactions. So what that really means is like anytime you write a check, you use your debit card, the checking account, the money just comes in and goes out basically. Again, earns less interest in a savings account. So anytime you look at a checking account, you're never looking at a checking account thinking, oh, I'm gonna earn a lot of interest, because as you can see, in our current checking APY is at 0.03%. So by just seeing that, you can already say, okay, if I want to earn more interest, it's gonna be in the I'll put it in the APY. You want to put it in the account with the highest APY. Next slide, please. Thank you. So again, moving outside from savings and checking accounts, the next one is going to be debit card. So really, what does a debit card do? How does it benefit you? Really, it's just like there's two ways when you get a debit card to basically make your transaction. One is a credit and one is a debit. The credit version is a signature-based transaction. A lot of times you basically put your card in through a chip or the sliding thing to scan your code, and then it'll just basically go through, basically. There's few to no fees. So basically having a debit card, there's no fees to it. There's no like charge to like have one, basically. It's always linked to your checking account. It will not link to your savings account unless there's not enough money in your checking account, and it has to pull from the savings. But the money will will pull directly from the checking account. Sometimes it requires a PIN transaction. It's just for added security. You just put a PIN number. The machines, the terminals may or may not ask you for that. I've noticed now these days, you see a lot of like, for example, there's a company called Square. You may have seen it at a lot of like places you go to. They don't require your PIN sometimes, so they just basically put your card in there, and it goes through. So which is why hopefully those businesses ask for your picture ID, so just to match and see, because it just prevents another like thing an issue you have to go through if your card gets stolen, basically. Again, the debit cards, going back to this, it controls spending. You really just use what you have, and that's pretty much it. And whatever you have in your checking account is whatever you get to spend with your debit card. Next slide, please. Next one is, so this is regarding to the debit cards as well. Like when you use your debit card, this is what I noticed is a common mistake. So again, going to the fees, this is actually a huge thing that we see a lot. So knowing your balances, so current balances, pending debits, available balance. And then as you see the asterisk, it says may take up to 3 days to clear. So really, like the best example I have for this is like if you were to go to like a restaurant and you have, let's say your account, you only have like $50 in your account, but you're in the restaurant, you spent like $30. So, and then, but the thing is, you tipped, let's say $15. So there's basically from $50, you spent 30, you tipped 15, you have 45 technically. So technically you only have $5 left in your account. But in your pending, it'll only show as $30, because a lot of times some restaurants may not clear their charges probably to the end of the day, or maybe they wait to the end of the week, who knows. So it'll show in the pending as $30, but realistically, and you sometimes, if you forget, you may think you still have $15 in your account. So like, oh, I can buy a $10 purchase or something. But when that transaction clears, you'll have basically $5 left. It will clear and it'll post. Posting means put it in your statements. It'll post as like $45, and you technically have $5 left. And if you were to overspend that, then you will get, your transaction will decline, and you will, and if you don't have any money left, you'll get an NSF fee, non-sufficient fund fee. So this is something to always keep an eye on. The key thing is pending debts. Debts is something that's usually like grayed out towards like the top of your card if you look at your online banking or your mobile banking. And again, just to be clear, like it'll never show the full amount. It'll just show like initial charge, and then again, if you add tip, it will add the tip afterwards. So this is like thing that you just have to be careful on and just be aware of. So just to prevent you from getting NSF fees. Next slide, please. Yeah, click. Yeah, thank you. So the next thing, that's pretty much this ending of the debit cards. The next one is going to be credit cards and like how it may benefit you. So credit cards, one of the things I want to mention is that it's not most of it is not free. There are many fees included on it. So there are, like, for example, annual fees, late payment fees, over the limit fees, or balance transfer fees. So for example, like I use the pictures that you can see in the slide. I use Hawaiian Airlines credit card and the Costco credit card, as those are probably very popular credit cards that you may see a lot. And again, both of them occur, well, annual fees. Basically, you have to pay them an annual fee to use their credit card. Usually requires a signature for purchases Again, advantages of a credit card. Again, debit card is really just spending what you have, but credit card is like there's advantages. So why would you want a credit card? Well, there's advantages when you use a company credit card, you get points, you get rewards, and it really makes you want to keep using their card to keep basically buying things basically, because again, the whole point of credit cards is you're basically like borrowing money from a institution or a company, and then in hope if you pay it off if you pay off what you owe within the same month, then you don't actually accrue any interest. Which I think I might go over to the next slide. So I'm gonna go over to the next slide actually. Oh, okay, thank you. So this is just I wanted to use our credit cards as an example. So we have two current credit cards. I want the main thing I want you to get out of this slide is the terminology. The one that on the very top is Visa Platinum Plus. That's one of our credit cards. But the key word is it says fixed 8.5 APR. So whenever you see a term that says fixed, basically it means whoever actually gets this credit card will get that rate of 8.50 APR, again, annual percentage rate. The previous credit card, previous photo were like Hawaiian Airlines or Costco, or it could be any other credit card initially. A lot of times those credit cards are about 15 to 20% interest rates. And then, which a lot of times they're like variable, which is on the next card right there. And it just varies on your credit score basically. So again, this credit card here, so this is like terms, these are words you want to look out for when you do sign up for credit cards. So for us, ours says there's no annual fee and you actually earn rewards in the Platinum Plus credit card. The next one is a cashback card. The keyword in this one is variable APR, and this will happen a lot. A lot of times you'll look at you'll see like credit card, like when you open like a credit card brochure, you'll see like percentages and it ranges from another percentage. Again, it's just depending on your credit score, also like how reliable you are. It'll vary. You'll get a different APR based on your trustworthiness. This one also no annual fee. So again, keep in mind, always look out for if there's annual fees, because that's something you want to look out for, because if there's an annual fee and you can't pay for it, well, that's not a good thing, right? Again, also look at rewards. A lot of credit cards will have cashback rewards. So for example, this one will have a 1.75 cashback. So basically any purchases that you make, 1.75 of that purchase will be basically credited back to you. So that's just kind of words you want to look out for. Next slide, please. Thank you. Okay, thank you. So we talked about credit cards, we talked about debit cards, but like we even talked about variable APR. So like how do you determine like your rate for an APR? Well, that's determined from a credit report. And this is something you will have to you'll definitely come across this when you're applying for a credit card, when you're trying to get an auto loan. When you go to the dealership, they will definitely pull your credit. That's for sure. When you look for a home one day, even if you just a plethora of things basically. But keywords to look out for: how does your credit score get generated? 3 things: public records, credit inquiries, and accounts. Public records, basically, for example, my best example would be if you have a speeding ticket, or you have, yeah, I think let's just use speeding ticket. Like, let's say you have a speeding ticket, or you have a late library fee, and you didn't pay it. If it doesn't go away, it basically, what happens if you don't pay it for a certain amount of time, it goes to a collections agency, and they will post it that you owe money at these locations and you didn't pay them back, and that will actually reflect on your credit report. Second one is credit inquiries. Basically, it's like how many times you actually applied for a credit card. Let's say you applied for multiple credit cards within 2 months. I've done that actually myself, so that affected my credit score. Or you applied for like just a plethora of like accounts that will pull credit. you add that with accounts. Accounts is basically like how many accounts you have, like let's say how many financial institution accounts you have, how many maybe savings accounts that you have or retirement accounts that you have. You compile all these three factors and that gets your credit score. As you can see on the right-hand side or left-hand side, there's numbers actually. So like, for example, adding those three elements up, you get an example, a number of 730 plus, or it drops all the way down to 584 below. That's considered poor credit. So all these factors are ways that generate your credit report, which lenders as in like when you apply for like a loan, they'll look at and just to see how credit trustworthiness you are. Next slide, please. If you can click, yeah, thank you so much. So as we talked about credit report, I know that's just like a thing that sometimes, you know, it's something where I didn't like pay attention to. So like after I graduated from college, something that I kind of just put underneath the table and just didn't care for it later. But later on in life, I realized how important it was to have a great credit score because you get lower interest rates on your car, lower interest rates on your credit card, and therefore you save more money. So having a great credit score is good. It transitions to sometimes a lower interest rate to, again, saving more money. But again, because I want to this topic is to simple ways to start building credit. I'm going to assume nobody has any credit right now. Probably not true, but this is just like ways to start building credit if you don't have credit. First one was consider opening a small revolving charge card. So basically, it's like a lot of credit unions will probably just, if you show some type of income, like a part-time job or whatnot, they can probably give you like a $500 credit card to start. You know, you can use it on the logos I used below or something I thought people can afford, like essentially like use the credit card and pay it off. Like Netflix and McDonald's, like you essentially like you put your credit card as the billing. They'll charge your card the like the whatever amount it is, probably under $15, and you pay it back from your that you can just transfer from your checking account. And if you can pay for these things, if you can pay for these things, they'll show like a history that you can spend money and pay for things back. Next one is check your statements carefully. So this is another big one, is basically like if there's a charge that is not yours, you want to catch it early, because a lot of financial institution is like, if you wait after, like, for example, like 60 days and there's like a charge of like $50 that you did not make and it's showing there and you paid for it and nothing happened, but after the 60 days you start like, wait, I didn't make this charge. So you definitely want to like look at your statements carefully, because you don't want to be seeing a charge that's not yours and you're paying for it. So definitely check on it. Next one, pay off the balance each month if possible. So again, this is like either a good and bad thing. One good thing is that you're showing that you pay things off, but a lot of times credit card company, the other side of it is like a lot of times credit card companies want you to like leave a balance and pay off the minimum. And it kind of like shows that you're building credit. So maybe this is like a weird, that part can go both ways, but definitely don't want to leave your balances not paid for. So for example, you spend $100, but you're only paying like the minimum, which is sometimes like $15, but then that's $85 left that's in the balance. It doesn't go away. It just carries over to the next month, and that will tack on you interest. So that's also important why you want a lower interest credit card. So instead of paying $85, you're probably paying $85 and a few cents. And if that carries over to the next month, it tacks on more. So it becomes $85 plus, now it's like $86 now, so it keeps adding up. Yeah. Next one, keep your debt to a minimum. Basically, spend what you have and don't overspend. Next one is don't max out your credit card. Basically, if you're maxing out your credit card every month, so for example, if you get the $500 credit card and you're constantly maxing it out, like you're always spending $500 all the way, like that actually shows creditors or lenders, it will show up in your history that you are maxing it out. that you actually need a lot of money, and that may actually hurt your credit score. Last one, do not apply for several credit cards at once. Again, I actually did that myself. It was probably just a mistake that I did not know of. But basically, after I graduated college, I wanted a credit card, and I didn't know where to start. So I applied for a bunch of ones that were probably online, and it showed on my inquiry that you apply for a lot, and what it shows to lenders is that you need money now if you apply for a lot of credit cards at once. What I should have done, which I should have done at the very beginning, was apply for the credit card at my credit union, because that's what helped me get started building credit, actually. So again, these are simple ways to start building credit. These are things I've done myself, and hopefully you can consider these options. Next slide, please. Okay, we're actually closer to the end. So sorry for the cutoff on the top, but basically, like, you learned a lot so far today: savings, credit report, credit cards, debit cards, fees to watch out for. This one is Zogo Finance. This is a financial literacy that you can use on your phone. They actually award you like gift cards, $5 gift cards, if you complete the games, or earn enough points to actually redeem for gift cards. Actually, we actually sponsor this. So if you ever want to take your financial literacy outside the classroom and learn more about different topics, more than what we learned today, it's a game. It's kind of like a game. You just kind of like pick and choose. You choose the correct answer, you earn more points. It's free. There's no charge. It's backed by over 200 financial institutions. Institution partnerships. So it's across all over the U.S. Something to consider if you actually want to like get paid while you learn about financial literacy. Next slide, please. Oh, actually, that's pretty much it. Actually, I did not realize that. Yeah, that's the last slide. Any questions? Actually, sorry, I think I saw a question right there.
So it looks like Raina, she asked, does UHFCU offer revolving charge cards? And a follow-up question, also, does a revolving charge card require a credit check, which is the same as a regular credit card?
Yes, actually. So a revolving charge card is I guess like it's basically like a credit card that you apply for. Again, I use $500 as like a starting point. Again, we work with a lot of college students, most of them, and that's the starting point that we point off. But yeah, so same, we do a credit check. Again, we check for if you have any like outstanding balances at other financial institutions. Because if you do, then it hinders that. It shows that we can't like really like. I guess there's no way to hide it. It's just like it doesn't show like enough trust that we can give you money. But yes, it does do a credit check, same like a regular credit card. I'm sorry, I may have worded it differently, but yeah, revolving charge card, credit card, pretty much the same thing. You use the money, whatever's left, you pay it off. That money goes back up, and then that kind of keeps again. You're basically borrowing money. Let's see. Hopefully that answered. I have my contact information, so if you do want to ask more, feel free to. I'm going to ask the next one. Is UHFCU primarily just for students, or is it for every? So it's for like anybody any alumni, students, any immediate family actually too. So it's not but it is technically also for everybody, because there's a connection to the University of Hawaii Federal Credit Union. So it's pretty much, I would say it is for everybody. There will be some connection. Like, let's say you took a class and even if you didn't graduate, you still count as membership. Yeah. The next one. So yeah, hopefully that answers that part where it's pretty much for everybody. But if you're a student, your parents, immediate family, alumni, if you lived in Hawaii, we'll find a way for you to become membership. Yeah. Next one for Laura. Oh, for you know, for that question, Laura, I'm gonna actually have to actually get back to you on that one. That one I am not entirely sure for that kind of question, but I have your name on there, and if Tasha could, or if you Tasha can share my contact to you, I will definitely find an
Sure.
answer to try get the answer to you actually directly. Yeah.
Most definitely. That's a great question, Laura. If you could enter your email address in the chat, and we'll be able to get you that answer as soon as possible. Well, we love questions, so keep
Yeah.
them coming.
Yeah. Uh, yeah. So Laura, I'll definitely get back to you on that one. And to Bethany, banks are better options for credit. Okay, yeah. So it just depends on like what you're really like looking for financially, like in terms of uh for example, like if you're just looking to start off a credit union that like can offer you basic financial like services, savings, checking, debit card, access to multiple locations across Hawaii and in the mainland. So again, share branching is a service that we offer that is a great way to access your account no matter where you are. Popular place a lot of people Hawaii go to Las Vegas. There's a location and there's a branch at in I think south of Vegas and like it's called Aloha Pacific Federal Credit Union. You can use that location. Uh, banks, I mean, yeah, again, it just depends. Like, maybe like I know a lot of banks they offer like really like personal banking. We offer that same service too, but maybe they offer something more. But it just depends on your choice. Yeah, what you want to look. If you're looking for something like if you have like a lot of money, for example, and you're trying to have someone manage it all, maybe a bank would be more option for you, you know. But it really depends what you're looking for. But either way is hopefully not a bad location. A lot of times people choose credit unions because there's a maybe like I don't know, for example, the lines may be shorter, more service, better rates on your credit card, better rates for a personal loan. So rates apply too. There's lesser fees again with the credit union. Again, banks sometimes they charge you. Sometimes you have to have a minimum in your account just to have an account open. You know, so also if you choose a bank, make sure you look at their terms and how they fee you because sometimes there's so many hidden fees that happen to you and you don't want to get feed for that. You know, uh, and I think that might be the questions. So yeah, Laura, I will definitely going back to Laura really quickly. I'll definitely look into that and see if I can find someone to get an answer for you for that. Um, but hopefully Bethany, going back to Bethany, hopefully that answered your question. Again, feel free to contact me anytime. If you have any questions that may pop up later. I know it's probably a lot of information that processed right now. Um, but yeah, yeah, but other than that, if there are no other questions, that's all I got for you today. I really want every one of you for joining me.